Hey, you guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you to break down the trade. Today, it's the Invest Answers Marathon 4-4, April 4th, $15 covered call we're going to break down. But first, remember, none of this is financial, tax, legal advice, should not be taken as such. It's your buddy, G Dinero, helping you learn how to trade options at the end of the day. So let's break down the trade. This was the trade alert that went out, and James said, this is my latest marathon trade. Marathon's at $12.98. Remember, he entered into a synthetic long for $2, which means he bought and sold the September 26th calls and puts for $2. Then on a spike on March 3rd, he sold the $15 calls for $2. He just bought them back for between 69 and 70 cents, pocketing $1.30. He said, I'm pretty much in charge of the volume today. I could have waited, but cannot risk Bitcoin staying this low for that long. He said he'll resell the calls against his synthetic long on big mean reversion spikes, wash, rinse, and repeat. And he plans to do what he did with Clean Spark back in the day, which is why his Clean Spark position's actually in a $2 credit, meaning it's free, beyond free. He's being paid to stay in that trade. And he's noted that Marathon increased their HODL and their NAV premium was back to 1.16, and then mentioned MicroStrategies is down to 1.52 from 1.72 last week. So let's break that down. Here's what he originally did. Invest Answers sold the September 18th, 2026 Marathon $13 put for $4.75. This means he collected $475 and needed $1,300, $1,300 in some form of collateral, that's cash or margin, to collateralize that put due to the assignment risk. What that means is when he sells that put, he's agreeing to buy somebody else's shares for $13 a share at that point, okay? So that's the first half of the original trade that he made, the synthetic long. That's the sale of the put. He then used that money plus some additional capital to buy the September 18th, 2026 Marathon $13 call for $6.75. In this case, he spent $675. So he collected $475 and spent $675 on the call. This resulted in a net debit of $2 a share or $200. So it cost him $200 to put the trade on per contract. And he has that assignment risk that he could potentially be put or assigned Marathon shares at $13 a share. So he needs to have $1,300 on the ready in some form to be able to buy those shares. Then on the March 3rd spike, he sold the April 4th, 2025 $15 covered call for $2. That means he collected $200. And then, yes, it says today, yesterday, with Bitcoin down near $80,000 and Marathon pulled back to $12.77, he bought back the call for 70 cents. So that means he spent $70. So if we subtract the $1.30 collected, right, in this particular trade right here, he collected $200 and had to give back 70 of it for a net of $130 that he collected from this covered call that he got to keep. If you subtract that from the $2 debit that was spent on the original synthetic long, it brings his cost basis down on the original trade all the way down to 70 cents a share, meaning he's in the $13, this one, the original $13 synthetic long, for 70 cents a share or $70, okay? He's using these big mean reversion spikes to sell covered calls in an effort to get back his original money that he spent on the synthetic long so that eventually they're free or even move into a credit like they did with his Clean Spark position. So imagine he turns around and does this a couple more times, exactly what he did. He's got plenty of time before these things expire. Let's say he did this 2 more times, each time collecting $1.30. Well, after the next one, he would go from being 70 cents in a debit to 60 cents in a credit. And after one more $1.30, he'd be almost $2 in credit, $1.90 to be exact, in credit on his trade. He'd be being paid to stay in this synthetic long. It's that ultimate money glitch that he talks about. It's a beautiful technique to lower your cost basis on a synthetic long while you're waiting for the stock to eventually appreciate to where you believe it will. And essentially, at the end of the day, he's looking to be paid to stay in the trade. Hopefully you found value in this today. Make sure you like, comment below. What'd you like best? What'd you learn? And if you want to see more content like this, make sure you're subscribed to my YouTube channel. Book a course with me where I go over TradingView and technical analysis or understanding options. Or if you've already done a course with me, jump on an individual appointment so that we can help you increase your financial literacy and be on that road to financial freedom for you and your family. Take care. Have a wonderful afternoon.